Hey everybody, what's up? It's Booksy. Today is Wednesday, August 30th, and we're going to be talking about AMC, which made a pretty decent move today, a little bit over 20%, and then came back down. End of the day at 16.68%, right around 1273, which is good because I think 1266 is basically our floor. That's where we want to stay above. The last particular motions of the day, they would seem kind of bad to me in some circumstances because you do get that push up, and then that secondary push up is starting to look a little bit like a distributive top, like it's trying, but it's not quite there yet. However, downside from here doesn't have to be all the way down. It could be just a retracement back down to test this creek. Maybe we could come down and find support on one of these guys. These are trajectory outs that could be applicable here. I'm going to talk more about this in a minute, but I'm happy that it closed over 1266, and I'll talk about why as we go along in the video today. I didn't do a video yesterday, so unfortunately I won't get to say, yeah, I called this out, but I was looking for that big push up, and I was specifically looking for it to come up to this range right at 1266. And I had talked about it, I think, first thing in the morning. I posted about it on the YouTube channel and on Discord. And a lot of it's just based on what I saw as a pretty clear rotation right here. And that rotation looked like it was giving way to a much larger rotation, what has to do with this bottom right here. And so as a result, which has to do with the bottom drop in that occurred on August 24th. So as a result, I've figured we're going to get that push up. I've been talking about it a lot. That I think it's very possible this stock's going to head right back up to like 45 and then cruise on up all the way to 200. And it's not because of, it's not necessarily because of like a short squeeze, although it's going to be a big part of it if it does that. But it also has a lot to do with the setup. And this is where I'm going to kind of jump off of the normal bandwagon that I'm on, which is talking a lot about that master sequence. I'm not going to really talk about the master sequence at all today. I'm just going to talk about these liquidity levels and what I'm seeing in this drop and what I think is going on with AMC stock in reality, as opposed to what we see on the AMC chart, which, depending on how you chart it, was either a humongous gap down or a humongous gap up. I don't think it really matters. I think that there's an incorrect and a correct way to kind of look at this situation. I'm going to make a case for why I think it's a bit black and white, because if you look at it from the current chart perspective and you don't include APE and you don't include the combo chart, which we had talked about for the last 12 months, then I think you're going to miss the big picture. And I don't think that you can kind of get a grip on what's going on without it. So yes, I talked about the last video. That there would be a strong possibility that we could come down to 1165 because that's the intersection of a whole lot of creeks, and ultimately, like, it's where we took off from back in 2020. And I think that that particular kind of situation warrants, attention, because if we were to come back and retrace to this bottom and bounce, it's like having a giant, in some ways it's like having a giant double bottom, but it's more than that. It's also just a method of looking at the big picture and saying that, yeah, I mean, if this is a retracement back down, then it's the finishing. Again, I'm not going to recap the last video. You can go check it out if you want, but it's a finishing of the major checkpoints all the way down the channel, all the way down the sequence, and therefore it could have a pretty strong reaction. And I mentioned in the last video that I think upside to that would also be a reaction back up to fill the gaps up at $46. When we go back and we look at this chart overall, there's a sense of uncertainty because, again, AMC just looks like it just sort of dropped off the face of the earth, right? And when you see it big picture, it's hard to not feel a little bit like, well, that's it, it's over. But during the conversion and during the last couple of weeks, I've been trying to stress that there's not really a simple answer to this question, because AMC traded much higher, much higher, right, than APE did. And if you look at the combination chart, all the way up until the conversion happened, There was no evidence that there was a distribution really happening necessarily on, like it was 100% happening, right? On the combination chart, when it pushed up, which was the big run to $8, it didn't actually push up and break the range on the combination chart. It just pushed up high in the range and then it sold off and went low. And when it went low, again, I'm stressing this because I'm going to show you another picture in a minute that's very similar to this. It didn't actually go super, super low. It dropped, yes, but it's technically, if you look at the values compared to where it was sitting around $2.80 to $3 right here. And if you look at the values of where we ended up, we're only at like $1.40, and the floor was at $1. So it kind of tells you a little bit about the range here, and that there is a strong possibility when you look at this that we're not actually getting the full picture if you just look exclusively at AMC. I'm going to make a case for that, and I'm not going to sugarcoat it. I think that, when you look at this by itself with AMC, it's dead in the water. I mean, it looks like it had a massive drop, and maybe you could have an upthrust to try to come back up, but it doesn't look like it would be successful. But this is the case that I'm going to make. I went through and I looked at the liquidity levels, and I went and tried to grab specific values, and I looked at them compared to what AMC's chart did during that conversion. And one thing that's super critical to me and that I've been thinking about a lot is how did the stock actually navigate? And there's essentially a couple areas, right, between 4 and 450, and then going lower, roughly between 2 and 220, where AMC and APE cross paths, as you can tell. They cross paths with the combination chart. And interestingly, and I made a point about this over the last, several months, I don't really making this connection, but interestingly, when it gets to those areas, AMC has had massive gaps. We're talking those 20 to 30% gaps have all been in that overlap zone. So it's fascinating to me because it's almost like they didn't want to trade. I don't want to say they, but the institution at play didn't necessarily want to trade those specific levels as opposed to just jump through them and help define them. And the same thing applies to APE. When it got up into those overlap zones, it rejects. And it did the same thing as well. And we know that those are some of the most critical points as well in the trading of AMC and APE together against each other, which we saw in the deviation chart. So to summarize, there's a high amount of liquidity that's currently been traded, a very high amount of liquidity that's been traded from about $3, maybe $4, we could say. I think a little higher is even better. Maybe $4.40 all the way up to about $5. And there's a high amount of liquidity that's been traded there. On AMC. There's a high amount of liquidity of shares, right, that traded hands between roughly what we're going to say is about $1.30 all the way up to $2. And if you should know this because we sat there for like a month. We sat right beneath 164, and 164 is like the center pivot of that range. It was the highest traded area on APE, period. So why is that important? Well, if you look at this as if it's just, hey, where did you trade the most, high and low, top liquid, bottom liquid, this actually just looks like a range. It looks like a pretty normal range spanning roughly $1.50 up to about $5.50. We did have extensions above and then below, but most of the trading happened in that area. And if you think about the average is somewhere around that $3 mark. Well, the interesting thing is that when we were coming down on AMC, we actually gapped from $2 all the way down to $1.60. We gapped through this entire area where presumably Antares sold off. That was their whole game, right? And then ultimately what? Well, whoever was buying was buying. So while Antares is selling during this whole time period, there's an equal amount of buying that happened that kept this from moving anywhere for like some 6 months, which is a lot. So there was a lot of shares accumulated from 2 to 160. And when you come to the AMC chart as it is right now, and you look at what happened from 2 to 160, you'll note right away what I'm talking about, because now it's roughly 20 down to 16. And notice that from that 20 to 16 area is where we have our massive liquidity gap. not surprisingly, all right, when you look at where is center liquidity on the combination chart, which again was around that $22.80 mark, that's the floor that we built right here. And then when you look at the high liquidity on that chart, the place where we came up to that would be considered the top, it's actually around that 471 mark, which is where we dropped off from on AMC. So right up now, it's because of the chart shift, it's no longer 471, it's like 46 instead of 47. And that's the area that would represent the top of that particular combination chart. And I don't know if you recall this, but during the whole endeavor, right, when it was being converted, my thesis was that there might be enough evidence here to suggest that this combination chart, which represented a value, right, that's being traded between AMC and APE of this stock, that drop is actually possibly still a spring because it never actually came back up and it didn't break the range. Now, it doesn't have to break the range in order to be distributive, and it did check the bottom and the top of the range on that massive double flush motion we got with APE and AMC before that sell-off. But the combination chart didn't go any lower than where it is now. It just combined with it, right? So the lowest it's gone at this point is down near that $10 area, which, yeah, it's low. It's pretty low, but that's where I had a S-curve going, and it terminated there around $1. And I had drawn that out quite a while ago on that combination chart, and I made a case that might be the goal, was to get to a combined $1 mark or close to it, because that S-curve on the combination chart seemed to terminate there. And if that's the case, then it's entirely possible that setup was just being built up, right, as a way of getting to that low liquidity beneath what would be considered the bottom liquid area that's been traded. So I used this yesterday, and I went back and I looked at each of these levels and I marked them off. And so what I did is I went through and I just did a simple diagram where I thought those overlaps were, where the different trading ranges are, what the combination chart kind of looks like. And this is what you're left with. It is an S-curve, right? It does come down and then break down again. But the reaction here is a reaction back into APE's trading range. And that's really critical, because if we were to just kind of bounce and continue down, let's say we reject here at this 1266 mark, one could say that was just a hook and it's going to continue downward. The thing is, and it's not impossible that happens, so I need to make it known that, yeah, it's not out of the realm of possibility. But the thing is like that 1266, we went in and we actually looked at those values. I found an old chart and I looked at where these bottom values were. It's roughly 1266. That's where these particular supports are. I don't have this as on the chart anymore, but this was back in November of 2022, and then during the bounce out in January, and then we have nearly a double bottom, not quite, going into, let's say, end of March or mid-March and then mid-April of this year. And those are all spaces that hit right around that $1.26, which turns into 1266, right, when we go into the reverse split. So anyways, yesterday what I did is I looked at, all right, let's assume, because you just have to kind of go with what you got, right? Let's assume that I did the macro master chart correctly, and that 1075 is this really important floor. And we came down and I said, well, it's not 1075, I'm sorry, 1175. We came down and I said, well, I could be a little off because it seems like it's setting up right around 1155 to 1165, as opposed to just where I said, originally 1165. So I said on stream that I would split the difference and say 1160, and that's exactly where we came and made this double bottom, which just finished today, was right beneath that. And that's where we have the intersection, and this was something that I had estimated back on Wednesday going into Thursday, that I thought we were going to come down to 1165, and that would end up being a floor, because if you look again, that's where we originally start the run on AMC, and also that's where all of the intersections of those major creeks, those M crosses coming down, intersect. So we did wrap around that, and then we broke out, and I thought that if we broke out, then I think if you're going with this idea that the liquidity is really spread out like this, then in theory, all you got to do is get back above 1266. If you find support, you should be able to then get a nice push to the upside because, again, in theory, this would be like the liquid bottom. So I wrote on the chart that 1266 is the actual liquid floor and everything below is more or less a possible spring. Now, there's going to be people out there that disagree and say, well, that's silly and it doesn't work and this could be anything. I think the volume speaks a lot for what we saw today. This is very, very high buying volume. I think that after a double bottom, having that kind of a buying bottom, especially if it holds into tomorrow, I think it definitely presents itself as a very strong possibility that this is going to be continuation here. And I don't mean to say that flippantly, but when we looked at this bottom structure and I saw the rotation, I said that I thought it would terminate after this comes back down and hits this other creek, and that's what happened. And I didn't think it'd come as low. I was hoping it would make a higher low, but it ended up making a double bottom. The thing is these parallels right here, if you take them and you apply them backwards, that's where we hit today. And if you recall, we did the exact same thing in that setup going into August. Now, what happened in August, before that really big run-up that we had, was that those parallels slowly were crossed and created that bottom that we ended up seeing end of July into August. It took some time. It wasn't immediate. It wasn't like this fast-paced, massive move. This move today was big. It was a big reactive move. So we'll see what happens in terms of speed. But at least in the case of August, it was a pretty slow burn and move, right? In theory, if this were to continue the way that it is right now, and the trajectory in meets the trajectory out, because we know that that's how AMC travels across its sine waves, did the same thing on the big picture way back in that early run in 2020. The trajectory in from that previous top to the bottom ends up being the trajectory that's used all the way up to 72 in the end from that bottom. And the same thing applied here, where trajectory in equaled the trajectory out. Here, trajectory in equaled the trajectory out. You just have to make sure you're getting the right sine waves. So what I did is I took that idea and that concept, and I took these two major trajectories, I mapped them out. I looked backwards. I did some anchor points here on these local bottoms and tops. I went through and I picked out some that are really specific. These ones, these ones, these ones, and these ones, as you can see. And I went back and looked to see what they may have played a part in. And there's not really much to say except that this guy ended up hitting almost perfectly April 2020. The rest don't seem to matter in the long term. But what this does do is it suggests that, yeah, if you were to take off within the next couple of days and it did follow the exit trajectory that's the steepest, presents you with an opportunity to get really far, really fast because of how fast it would be moving. Now, again, you might say, well, that doesn't make a lot of sense. I'm not suggesting that it goes beyond this. I'm suggesting that that is the run, that it basically moves from here. And at most, if we can get to that 50-50 jump, it goes up to, not surprisingly, 209, which is right around the old distribution level that we were targeting up here, right, in all of the models that we were looking at. So if it gets a 50-50, great. It may end up going all the way up to that 210, which is the old 21. But I'm seeing an intersection, a strong intersection around 150, almost exactly 150. If you recall, this area is where we came down and distributed from previously. So if we were to take this and go back, it's essentially like the previous top. It's a retracement back to the previous top that we distributed off of in August on this particular chart, almost to the penny. And again, I wasn't making these lines like willy-nilly. I was trying to anchor them to some pretty specific tops and bottoms and see where they go, because we see the same thing happen in the walk down going into the run into 72. Going further than that, you might say, well, all right, but you in the last video you said we can't go anywhere unless we get above 45, and that's true. But what's interesting about this particular setup is that this gives you a context for how you get from here to 45 and why it would make sense that this could actually happen very fast over the next couple of weeks, because upon learning and thinking about all these things, I was looking at mapping out where are the liquid centers, right? Because it's enough to try to draw it right here, but let's get some actual concrete data as best we can. And I just mentioned it. We know that roughly 45 is the liquid center for AMC. It's where it's been trading the most. There's a heavy amount of trading right here around 45. It's one of the heaviest traded regions on AMC stock, period, which is a big deal. And it's right where that gap is. And then on the combination chart, as I mentioned a few minutes ago, it's right around 28. And that's right where we have a shelf, where we bounced, and then where we broke down from. So another key level that was marked off on the way down. For APE, we know that it was 1640. 1640 is right where we opened up the day that we had that massive gap down, and then we slid from there to come all the way down to this bottom. Not surprisingly, again, we skipped over $2 almost exactly all the way down to 1640. So we jumped over all of the liquidity, right, that was essentially from where you see this white line here at 2 all the way down to 1640. We hopped all of that. And you might be saying, well, you can't do that because APE isn't the same, yada, 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 and it had to convert, so it had to change value as well. That's not actually true. Remember that if you bought shares of APE, we met together. Like AMC and APE came together in price in the end. And that means that there is no special multiplication value for APE. The shares that you bought at $1.50 are still $1.50, cost basis times 10, right? So it's not like APE magically changed value in the end. It didn't. In fact, we had anticipated that APE might run up to meet AMC, and instead AMC came down to meet APE. But what that does, again, is it puts it in this ballpark down here. And then you have this case of, well, if I can get back into the range, hypothetically speaking, and this is where I'm going with this, because if this were all one chart, it would make sense. This could easily come all the way back up to the top of the range in SOS if that's a spring. And that's where I'm going to get a lot of disagreement, because there's going to be people that say, like, well, that's not how it works, and you can't, mix these two together. But they are mixed together. They are. These stocks were both traded. Maybe they weren't 100% traded equally, but they were both traded over the last year, from August to August. Therefore, the liquidity has been traded in both of these ranges, in my opinion. And what that tells me is that on average, most of your institutional buying, if they were buying a lot of APE and dumping a lot more of the AMC, clearly they didn't dump all of it because AMC still held for a long time. Most of their averaging would be somewhere around $3, okay, that middle point. So all that's to say that if we look at this like it's these three areas instead of just up here with this massive drop, it changes this very, very drastically, because when you zoom out and you look at the big picture here, suddenly it's like, oh, well, the range that was predominantly traded was this top, this bottom, with an average right around here. And that, to me, looks like a really prime spot to go up to an SOS, where you're basically going to be breaking out potentially from the same level that we took off from in June. Now, that by itself might not be enough. So what I did is I also went through and I looked at, all right, well, let's mark those off, and then we'll see where, kind of where the chips fall, right? We'll see how things land. So I set up, here's where I think the high liquid is. I think it sets up right at the bottom on purpose. I think it sets up right here. That's where we see the last kind of place that APE had footing going into that low area. So I put on the chart, this is my idea, right, is that we set up right above, I said right below high demand. It was right below the highest demand, which is that heavily traded area at 1640, right above a very low liquid area that hasn't been traded a lot, which is very typical of a spring. So right below high demand, right underneath it, reject off of it, head into low liquidity. That hasn't been traded and it hasn't been touched for like 2 years. I said, if that's the case, then 1266 is actually the floor and everything below it would be a grab. Now, whether I'm right or not, it's very clear to me anyways that the numbers 1165, which is where this wraparound happens, and the numbers 1266 are at play. So thus far, it's been fairly accurate. We wrapped our finger right around 1266 today. Now going forward, I went ahead and I zoomed out one more time. I'm going to do this one more time. I'm going back and forth a bit because I did set up, here's where you'd have that high demand. Here's the range. Here's the primary zone. Here's the ape liquid center, right? These are the places that I kind of marked off as most important. And then here's where things get really, really interesting, okay? So when you zoom way out on the big picture and you look at this macro downtrend, I'm going to go to like the 4 hour. This is where things get kind of crazy. This macro downtrend could be split up into 3 major trend lines. So you can use some really tight ones, right, that kind of hug the all-time high, and August kind of goes out of that, and then the recent area goes out of that. You can use another one down here that kind of hugs the bottoms like near March and the other bottoms in January of 2023. That's an easy 50-50 spread. But the one thing that doesn't change is that midline, right? And that midline right here indicates the center point of this entire movement. Well, when you look at this, no matter how you look at it, if you want to use the outer extremes, which is what I had just a second ago, where you're using like the very low point in May 2022 and the high points right here in August, those particular spots, right, if you want to use those, that's fine. Or if you want to use the tight ones, that's fine. It almost doesn't matter because regardless of what you choose to do, when you look at how those interact with where we were presently, what this looks like to me is a bounce that goes below where that main trend is. And I made a case in that macro video that I did, which I said I wouldn't do another macro video, but I looked at the master fractal. I made a case that it always goes below. Well, here's the kicker, right? Is if you look at where this particularly is right now, and you use those highs and those lows, and specifically I wanted to use this one right here, right? And you look at that 50-50 spread, notice where this trajectory intersects these, coming back up through these channels. Notice that the intersections here are the combo liquid center, the AMC liquid center, and the ape liquid center. And we got to remember that, yeah, like this has not been a unified chart for a long time. And if you're right about this, there's not even a channel here, Booksy, but they set it up in a way that this particular trend, these trends are showing that this particular range, at least at this particular point in time, is the correct distance away from the current spot. Does that make sense? Like within the channel. I know that's kind of a weird thing to say. But basically, like, these are trajectories, if you want to call it that, trends, and they intersect a current V-shaped bounce in the way that they're essentially grabbing onto each of those three liquid points that we talked about and we looked at right here, right? And they're passing through them. Now, you might say, well, of course they would do that. And again, if it were by itself, I wouldn't be like, oh, this is such a big deal. But when you start adding the pieces back together, it suddenly makes a lot more sense, because when you look at this big picture and you consider that there could be a major reaction back up here to 45 to gap fill, that places you in that SOS region on that combination chart. And if you were to SOS on that combination chart and push out, you've broken out of the farthest reaches of this macro downtrend. You're now out of it, right? This is the highest point to drive through right now. And so even if you have it lower, it almost, again, it really doesn't matter. It's still right within that same pocket where you would be intersecting that gap fill. So pretty interesting, right? And then of course, this being the all-time highest traded region, we know that a push and a break over that could yield a massive push, possibly a 50-50 move to the upside, which I just showed you is 210, which is that $21 area. Pretty interesting. That, again, in and of itself may not be enough to convince you of something, but I did this inductively on stream. It's a pretty interesting watch if you want to watch it, because I didn't have all this data. But I then took these trajectories and I worked them out, and yeah, they ended up basically intersecting this pocket here. There's two zones. One is the higher zone that I was kind of thinking about earlier, but the other is this kind of lower pocket. And either way, they intersect roughly in a month's time frame between mid-September and mid-October. And no matter how you kind of cook it, it doesn't seem to change that much. It's still this upper area that's in target if it were to continue to run. Now you might say, okay, yeah, but they've done all kinds of stuff to smack us down, and it doesn't really seem like there's going to be any end to this. Why couldn't you just have a pump that then redistributes and all this stuff? Well, you could, and I don't want to say that this is a definite thing. It's not. But here's my thoughts, okay? If it comes back above 1266, which happened today, and that really is like the liquid floor, if you can get a push up and come back above the next main spot that has supply, which is 1480, that puts you right underneath APE's primary zone of trading. Also, you can see that if you look at those parallels, I mentioned that earlier, on that setup, it's just like the way it was in August. If you go to the outermost parallel, that intersects that pocket. So the trajectory in, trajectory out points you right to that pocket where you would be right above 1480. If you make that break, just like we saw the gap here, there's really no reason to retrade that area, which means you're essentially going to move right from 1480 all the way back up towards this high liquid zone right beneath 2809. And in theory, that's a big move, but this could take like a few days, right? This could take 3 to 5 days, and that move itself could take a couple days and be quite large. And the thing is if I'm correct about this, and again, this is going to be debatable, but if I'm correct about this, then really that midline is the 2.8, and that middle line of that liquidity is where you're going to come up, find support, and then push towards the top. And if the goal here is to go from a spring to an SOS, there's no reason why you don't just LPS on 50%, which just so happens to also be 50% on this downtrend. It's the same pocket. It's like set up perfectly, so it's like it's essentially like right where it needs to be, right? Right where these pockets need to be are both the horizontal and the diagonal supports. And the trajectory line matches it quite well. We could go further and we could look at every single one of these breakdowns, and I'm pretty positive that you would see that each one of these guys also sets up right where it's supposed to. So if you get that breakout on this trajectory, you can see that each one of these guys in between these trajectories sets up at the perfect spot, anchored right around those middle lines, right around those trend lines on that massive macro downtrend. I don't think that's a coincidence. So what I think we're going to see is, I think if I'm right, and if I'm not right, then it's going to go down pretty low. You know, there's plenty of other people doing targets for that, you know, down near $7 or so. But if I'm correct, this is going to come up and come above 1480. And once it breaks out of this trend right here, which again is a parallel drawn from the top on Friday, August 18th, it's now within the bottom, right? You get above all the things that you need to get above. You get above the major macro downtrend, which we rejected off of, hint, hint, nudge, nudge, at 1480. You also get outside of these creeks, and then you get that push right through the liquid center, and you're heading right back up to all of these places where you'd want to be finding supports, going all the way back up to the SOS. It's essentially like a perfect setup for a run back to the upside, where each of these major creek lines, 1, 2, 3, is met with a really strong support resistance level that relates to this liquid setup, but also relates to that diagonal setup as well. And all of those things could get you just what you need to catapult you up, possibly as high as 210, but ultimately I think 150 to 210 is a very strong possibility here. And it may seem crazy to a lot of people, but you got to remember, if the combo chart's correct, and it just so happened to have this kind of terminal shakeout move, and it responds by doing like a 50-50 pump, it's not any different than what we see on some of these other guys, where they've had these massive S-curves that result in a 50% retrace. I mean, there's one like every few months here on AMC where you get this big move and then there's a big retrace back to the upside. Some of them are very violent and fast, some are a little slower. This would be a representation of a massive one here that would basically have like a full-on 50% retrace. So we take this and we look at the big picture here and you say, well, all right, so there's an S-curve here on that one and there's not a really good one on AMC, but maybe it's there, right? And we're going to look at the lows. I want to say it's like, what was it today? Went from the low today. Oh, the low today wasn't the right one. Let me get the right low here. 1073, is that correct? So we're going to do this, and I'm just going to end the video right after this. There's no other charts to look at, so we don't have to jump between them like a million times. I don't know where the top is anymore. I'm going to have to figure that out too. So let me get that really quick. It's been a while. High of 393.63. So 393.63. Okay, so let's see where it is. Well, the 786 level is right there on that 182.09. I'm going to have to change these numbers. 182.09. And then the 0.5 is right up here on 64.99. Now you might say, hey, why did that change so much? Well, it changed because we had a shift and then we had another, we had a chart move right before the other one. And I also didn't do, when I did this, I was using these previous bottoms here to estimate the bottom. I wasn't using the ultimate bottom that I got that I thought was going to be more around 1165. So to be fair, $65 is looks like that point where it's the 0.5 on the reversal. Why did I put 54? That was wrong. 65. Typed the wrong numbers. But yeah, look at where the 786 is. It comes all the way back up to that top retracement right there. So if you ask me, do I think it's possible that we get up here and that this happens? My answer is yeah. The move that happened in January was a huge move. And the move that followed was also a huge move. And they amount to some like almost 4,000%. The move that we are asking and looking at right now that's a possibility is not nearly that much. It's a move of like 1,600%, which is a big move. But ultimately would probably end in a distribution. And I'm not going to get into that right now, but it's suffice to say, hopefully this is enough for y'all at the moment that the way this is set up short term is absolutely favoring a bullish possible run here, as long as the bulls that stepped in today are the bulls that are going to continue. And it's not just some kind of up thrust before a massive dump and then it trades low. And I think that this particular setup right here lends to that idea. I don't think it's crazy out of left field. I don't think it's based on anything except for just general liquid observation. I think that there's this idea of like concern about where we might be in the scheme of things. And I'm trying to say is basically you're like right here. Is essentially you're like right above that floor now. And as a result, we just need to see it find support and start pushing up. So that's all I got for you today. I'm pretty excited as long as we can get above 1480. I think that's the big one. Anything else that happens down here could just be a series of accumulations going all the way up to this point. I'm not confident it's not going to take more than a couple days. It could be more like 3 or 4 days. So it could take well into next week. But I'm going to be watching it really closely and definitely going to be watching these key levels as we go. So with that, I hope you all have a good one, and I will talk to you later.